Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, June 15th, 2025. Um, the Friday, the markets got shaken up by the Israel attacking Iran. So we had a really big gap down, and then we started battling back up again. But once we hit resistance, selling stopped it, started again. And really, the trade that I had thrown out in the trade room was that, we wanted to take a straddle trade, and we were using IWM with it. And really, the what it was when we saw IWM head up to our upside target, the recommendation was to either put a stop on it or take profits on IWM on the call side. And once we made that top, IWM came down and actually hit the put our puts in the money as well. So it worked out good. I actually had a wedding, and my nephew had was getting married, so I took off early. I didn't make any trades for the fun, but that was really the one recommendation that I said was do the straddle, and then once IWM went up there, take profits on the call side, and then by the time the market closed, the put side was back in the money as well. So it worked out pretty good. But I didn't really have any idea what was going to be the catalyst for a drop, and this one really could be it because it's going to have a lot of repercussions. Meaning that the I know that Israel is attacking some of Iran's oil wells as well as their nuclear sites. But it's going to be an inflationary thing. That's the problem. I think that's why the markets got so shaken up. Was oil's probably going to start spiking now, which means gas prices are probably going to start going up, and as is inflation. So there's good cause for the selling, and it was really just because of that part. So I didn't know what the catalyst was. I don't even know if this is the actual top on it. We may pop back up tomorrow. We have to wait and see. Like I said, but this one is going to take a little bit of time to digest by the bulls. But as far as the wave structure, what I was really warning was that we had these bearish divergences. Wave structure was in place for 5 waves. And I said, I'm not recommending to short this market, but you want to really, we took our profits here, but you wanted to be prepared for the drop. And like I said, this catalyst makes sense. So if they continue down, you can see we have some support right here at the 59.26 level. There was a top here and then support here. So this is going to be really the first line that the bears are going to get through. It's going to be right here at this at the 59.34. If they get through that, you can see the next support. I'd really say they're going to come down and close this gap, but most likely going to come down and at least do a 23% retracement, which is also this wave 4 here. So I wouldn't be surprised to see the S&P come down and test this at the 57.73 level. If it holds, then again, this wave 5 could be expanding. I'm not sure, but if this holds, we'll probably get a bounce back up. But I'm still thinking that these highs, even if taken out, they're not going to be that much more. The easy money was made already. We took that. We got out right here, and right now we've just been waiting for a catalyst to be able to drop the market so we can buy some of our quantum stocks, on the discount. So that's been the plan. That's what we've been doing. And again, if we're going to head down, these bearish divergences make sense. You can see we're pretty oversold here. So maybe we get a bounce here, we come back up, and then eventually make it back down to close this gap here, as well as test a 23% retracement. Now, if this gets taken out, that's where I believe these other gaps are going to start getting filled. And that's been one of the issues that I've had with this bullish, run right here, is that we've had a ton of gaps underneath that, and really, when one goes, they all start collapsing, and we get a move down pretty hard. So this gap right here is at the 56.75. So that's about almost, we're talking almost 300 points to the downside from where we were at these highs here. So actually, yeah, it'd actually be 400 points if we came down here. So, any case, this would make sense if we came somewhere down into the support area. If they lose this, then we're looking, we're probably going to be coming down to the 54.50 level. This would make sense if we came down here, it held it, and then from there we make a move up. But I really think that this could take a little bit of time to play out to get down these levels where instead of having just one big massive move down, we can have it could take several weeks where we're going to come down, bounce up, come down. But I think really once we get into this area and we start heading into late July or sometime in July, that's when I believe we're going to start the rally again, and that will probably take us to new all-time highs sometime in the fall. So let's take a look at what we may be able to expect tomorrow. We have, you can see here that we have some bullish divergences that are in place. So here's the low that came here. That was the initial drop that we had here, and we bounced up. So here you can see we have some buy signals. We're overbought, and we went through the 23% retracement. So if it's going to head down, then we're looking at the 59.50 as the next target, which would be the 38% retracement, and would close this gap as well. But remember, we have a wick that is pointing all the way down at these levels here at the 58.27 level. So don't be surprised if we come all the way down to the 78% retracement. Now, if we get a bounce, this is going to be the area that I'm watching. It's going to be anywhere. The first resistance zone is going to be at the 6,000 up to the 6,011. You can see that's the moving average right there. And if they get above it, then we're looking, it's going to be anywhere from the 60.11 up to the 60.22, possibly even up to the 60.25. And if they get above that, then we're going to be looking to close this gap. Now, again, on the downside, if we see continued selling, we have this bearish wedge with a downside target right around that 59.11, depending on when it gets there. It could be to 58.77, but this is really the area that I would be looking. If it holds, then I would expect a bounce back up, and this is where we're going to be able to tell whether the important high is in, because if we get a bounce and this is used as resistance and we continue down, what you're expecting is each move down to make a lower low and a higher low, a lower high. That's just going to kind of stair step down until we get down to some kind of major support area. So let's see what plays out tomorrow. Like I said, this is the short zone that I'd be watching right here, with the possibility of it coming up to close the gap. And then on the downside, I'd be looking anywhere between the 59.50 and all the way down into the 59.11. So let's see what plays out tomorrow. Have a great night, and I will talk to you guys in the morning.